How's it going, everybody? My name is Mistango, and I'm back on the barbecue this week with Orecap Invest, which is a unique hybrid company in sort of our crazy little space that this company not only explores its own projects with the help of a major in this case specifically, but it also invests money and I guess time and effort as well because it is a hands-on investor in other companies. So helping other companies bring their programs to hopefully a success. So that's who I'm interviewing here today, Stephen Stewart, obviously, who I'm not going to be interviewing here today, though, is your financial advisor. This will be just a talk, one that's general and impersonal in nature. So if you decide to take any investment decisions based on this conversation, you are running a decent chance of losing your money because failure is the norm and the expectation in this industry. And if you don't know what you're doing, then that probability grows ever so more. So be prudent and do more research before doing anything with your money, as well as consult a licensed financial advisor, which again, none of us here today are. I also want you to know that I work for Orecap as communications consultant, so you should understand that I'm very positively biased towards this company, and you should not treat this video as independent research. But that does not mean that we're not supposed to be having fun, right, Stephen?
This is called CEO Barbecue, so grill away, Antonio.
Well, let's start there. What have you done? What have you done for shareholders lately?
Well, it's sometimes it's hard to see what we do. We do a lot of things behind the scenes, of course. We're working, or I must say around the clock would be sort of an exaggeration, but we work very hard, and we've recently grown our team because we've just had so much deal flow since we have changed our focus. And you noted off the top that we have a major mining company. We have an Eagle paying our bills on at least on our Kirkland Lake portfolio. We have other properties, but we've shifted our model away from the typical junior. There's 2,000 juniors, all of them drill, rinse, repeat, raise money, drill, rinse, repeat. Orecap has completely shifted its model. While it does have those physical assets, amazing physical assets located in the Kirkland Lake camp, and Agnico is committed to spending $60 million to earn 70% of that. That is not our focus. So that's almost set it and forget it. Any other physical property we have, we're looking to option it off and use other people's money. In the meantime, we've got treasury. We've got a lot of working capital, which is defined as cash plus our equity positions in other companies like American Eagle, like QC Copper, like Awalé, and like Mistango. And we're looking for more. We're looking to grow that side of the business, which is either equity investments, not passive. So we are not a fund, and we don't give people $1 million and wish them luck on their drill program. That's not our business. We are in the business of active management, providing alpha, as an MBA would say, on top of our investments. We want to add value through either activism, which can mean changes at the board, changes at management, or just active investments, meaning being involved in M&A, introducing strategics, capital injections, and even spinoffs. That's something that Orecap has a long history of doing, and hence its positions in American Eagle Gold and QC Copper. Those were spinoffs. We created those companies within Orecap, kept 50% of the equity, which we have each 5 million in each of those companies, and we dividended off 5 million shares each in each of those companies directly to Orefinder shareholders. Very few companies like us or like a junior offer a dividend. It's not unheard of, but it's rare. And so those are sort of creative opportunities that we've given to shareholders over the years. And so that's really the focus of Orecap. That's the mantra going forward, is looking for opportunities. We're an opportunity generator. We leverage my deep contact and knowledge of assets that I focus on, particularly in Canada. We recently hired, and I know you've had Jerry on your show. Jerry's our CIO. Jerry's been around for 40 plus years. I don't want to date him, but Jerry's been around for 40 years. He knows what he's doing. And he was the founder of MarkWest, which was everybody knows MarkWest. If you do business in Canada in the exploration business, you've probably been financed by MarkWest. So Jerry has these deep relationships, longstanding relationships, and knowledge of assets because he's written checks into these companies. So now he's with us, leveraging his contacts, not just at the CEO level, but also he knows a lot of broker dealers and funds. Those are his contemporaries and clients. And then just recently we hired Gotham. And Gotham, I've known Gotham for many years. He worked with us in the past. went on to form to be a part of a mining tech business, but then came back to join us because I've got my hands full. And I need a trusted, sophisticated individual to help me do due diligence, but also identify opportunities in the weeds. So Jerry Jerry and I look at opportunities through our relationships, call it C-level sourcing, and Gotham looks in the weeds, so to speak. So he looks at the data and identifies opportunities that we can approach. And so we have a sort of a dual approach of sourcing deals, but I would say the vast majority of deals comes through just our network. And so people know who we are and are looking for, money. And it's not just about the money. Yes, money gets us a part of the deal, but it's really about what can we do for them? How can we help them raise additional money? How can we make changes? Because there's so many changes that are required. This business is full of inefficiencies, and that's the opportunity. I mean, that's the opposite of an efficient market, which is a fallacy, right? I mean, there are inefficiencies, and there's no more inefficient market than the juniors. Hence, if you can identify those opportunities, come at them with solutions, and then do so even more so, invest at the bottom of the market. And I don't know if we're at the bottom. It certainly could be, further down to go, but we're certainly, I think it's fair to say, we're closer to the bottom than we are to the top. So if you can take an active approach, solve problems, and then catch some tailwind, which I think is coming. I don't know if it's coming, which should be said before. I don't know if it's 30 days, 90 days, maybe 3 years, but it's coming. And I do think there's an awful lot of change on the horizon. The world is coming off, binging off free money for so long. And now we've seen interest rates go from negative to zero to now mortgages here, at least in Canada, are 7%. If you have 7% mortgages for long enough through attrition, as these mortgages roll, and I'm just using mortgages as a proxy, but it's the same for corporate debt, commercial real estate. There's going to be serious fundamental changes. And I don't think that everybody's sort of betting on, and certainly the powers that be that control these rates are absolutely betting that they can nip inflation in the bud with high-ish interest rates, and then everything will be fine again. They go back down. I don't think that's the case. I think this is going to be higher for longer than everybody anticipates, or at least there's going to be cyclicality in it, just like we saw in the 70s. And at the end of the day, without getting into a macro thesis, which will ultimately be wrong, but it'll rhyme. And but I think there's going to be fundamental changes, and that will impact the fundamentals of our lives, which are the metals. That's how we rebuild. And we used to be chasing financialization and growth in tech companies, and I think in the next call it 10 years, we're going to be chasing infrastructure and things like copper and nickel and uranium, things that are really fundamental to productivity, real productivity.
There's lots to talk about there. I've also seen besides the share prices now being very, very low on the TSXV specifically, volumes are extremely low too. So you have volumes in share prices at pretty much all-time lows. If you pull up an all-time chart of the TSXV, it's at an all-time low, and volumes are as well. So I hope you're right for us being closer to the bottom than we are to the top. But there's lots to unpack there in what you said about Orecap specifically. So sort of to go back to that, getting hiring new people as Gotham now and Jerry earlier on in the year, that's pushing your G&A higher, right? And that's happening in a period where, as you're mentioning, capital is scarce. It's hard to raise capital right now. Not many people are paying attention. So, I mean, I would argue this adds risk to the strategy. So how do you see the risk being worth it of these new hires?
Well, without good people, you can't assess good projects. I mean, that's sort of part of our fundamental thesis is people, projects, and capital, and everything is sort of symbiotic in that way. And we run a very lean G&A across the org group, and Orecap is no exception. But if you want to do what we're doing, you need good people. So instead of paying drillers, we're paying Bay Street types, if you will, capital markets types, geologists who aren't necessarily in the bush, but geos who are assessing projects, in the office. Just deal flow. I mean, that's part of the business model. So instead of an army, not that we ever had an army, but we do have a deep bench strength of geologists sort of as a part of the org group. As you know, we're more than just Orecap. So we have this in-house team of geologists. But we needed more help on the capital market side, because that's exactly what we're doing, and that's a signal to the market. I mean, sure, you spending more money, that's risk. That's that's almost the definition of risk in a business, is spending money. But you need a return on that, right? You can't not spend money and expect to attract good people. So I mean, fundamentally, that's it. Without Gotham, I don't think we could fully execute, or somebody like him fully execute our plan. And these people with one or two deals, these people pay for themselves, and so you also have to incent them with options outside of that to give them more upside beyond their take-home salary to pay their rent or their mortgage and whatnot. But I mean, that's just part of the business. So yeah, if anybody's afraid of us hiring good people, invest in another company.
And there's many mouths to feed, I guess. But it also depends on what those mouths do for you. And what you're saying is that they're worth it.
There's no mouths that are that aren't earning their keep. I'll tell you that.
No, I know. I mean, I've known you for a while now, and you're not the kind of guy who would just let someone sort of leech off of you without earning their keep. So, I mean, if people are not trusting you, they can take my word for it. Remind me of your G&A and cash, by the way. Where it's at right now.
Our G&A. Okay, so our cash is about $3.5 million. Our marketable securities, I don't know what the mark-to-market value is. I don't look at it, but I can sort of list off. We own about, collectively, Orecap owns $1 million worth of Awalé. We own 5 million shares of American Eagle, which is $1.5 million. We own 20% of the NAC project, which is probably coming back to us in the form of $1.5 million of additional shares of American Eagle. That's their option. I expect them to exercise it. We own roughly 20% of Mistango River Resources, which is working away, and it also has a $60 million exploration agreement with Agnico Eagle, identical in fashion to that of Orecap. It also is in the Shabandouen district, which is it's an emerging district, very interesting, lots of gold, very big system there. And it's been proactive doing other sort of creative things. And then last, what else we own, I can't forget, is QC Copper. So, which was the first company we spun off. And frankly, if you want my opinion, QC Copper, across all of the assets that we have in our portfolio, QC Copper is the most likely statistically to be a mine. We are convinced it's going to be a mine. I think we have other future mines in our portfolio. There's no question about that. But in terms of what we know about a particular asset, it's the Opemiska, the QC Copper asset, where we have a ton of data. We tore that data down, built it back up, drilled an additional 60,000 meters since that maiden resource. The maiden resource was delayed, as those who follow the company know, but it's coming out soon, and it's going to define, we think, of a very high grade, large bulk tonnage deposit right in the middle of Quebec, which will ultimately form the anchor of a new district. And it's not a new district; it's a new district reborn, which is the Chibougamau district of Quebec. All the infrastructure's in there because it's produced so much copper and gold throughout the 20th century. We're just reinterpreting it as from an underground mine to a bulk tonnage open pit. And there's lots of deposits there. And if you can put call it a 30,000 ton a day mill, which is huge, and something that we think that would support the Opemiska deposit, all the other orphan deposits that are in and around there, plus ones that have not been discovered because that area hasn't been looked at in the context of what we have been evaluating, which is near surface material. So there's, that can be a camp for the next 50 years. Obviously, that's a forward-looking statement, but that's the sort of potential that those mature districts that have they're huge endowments, but need to be revitalized. And we think the Opemiska is at the tip of the spear, revitalizing that camp. And so again, we've got exposure to that. So again, I haven't, forgive me for not knowing the up-to-date metrics, but I would suggest that we're probably trading at cash or below cash in terms, or I should say at working capital or below working capital. And then you get, our projects with Agnico for free. You get our, you get us for free. But I mean, that's not unusual right now. I mean, that's sort of almost the state of the market. There are exceptions to the rule, but I wouldn't say that that's outside of the norm, or people maybe not trading at cash. Some are probably trading below cash, but I think we have a very unique strategy, and we've really positioned Orecap to be the ultimate contrarian and the tool for our group and our team to express our interest and make active investments accordingly. So it's different. And it requires me and you communicating to shareholders for us to understand what we're up to and why. But again, it's really just about looking at all of our peers. The vast majority of them are struggling and require capital, and the lack or dearth of capital creates corporate problems. And things that can be solved, like if there's a red flag on an asset, if the metallurgy is awful, well, we're not interested. We can't solve that problem. There's lots of problems you can't solve. And there's also lots of opportunities that aren't actionable. That's probably the biggest thing. I mean, I see all sorts of opportunities that are interesting, but oftentimes people don't want our help. They want to do nothing. They like the status quo, which is them hanging on to their jobs or not investing at these particular valuations. So, that's our job, is to weed through opportunities that we think are interesting, are in our wheelhouse of expertise. We stay away from jurisdictions that we don't have experience or trusted boots on the ground sort of thing. And then they have to be actionable, because you can find the greatest opportunity in the world, but if they don't want you involved, it's too hard to go to hostile. It's really, it's not our preferred method. More often than not, the lawyers win and the shareholders lose.
The lack of capital is something that's obviously a big risk right now. You're not there now, but why I'm asking your G&A is because I'm trying to figure out what the runway is, and I'm mostly trying to figure out whether you're going to have to monetize any of your positions that you just went over this year, or whether you're going to be looking to tap the markets for capital anytime soon.
Well, we're in the perpetual business of looking for capital of various sources. I mean, there's no question about that. We don't, if we stay, I didn't answer your question. Our G&A typically is about $500,000 a year per company. That's standard, and I would say that's low. That's standard for us, and it deviates based on deals. And if we have a big transaction and there's lots of lawyer fees involved, then maybe that goes up. Just like a company doing a drill program. So but I mean, stand still, we're probably less than $500,000. So do we have to raise money? No, we don't. Are we? Do we want sources of capital to be able to execute on more deals? Sure, we do. Can we liquidate some of our portfolio? Absolutely. We're not forever holders of our positions. We will absolutely monetize our positions. So, we spun off QC Copper and American Eagle, and we invested in Awalé to make money. So don't forget to sell. And we will do that when the time is right. There's make no mistake about it. And then we will take those wins, and I expect them to be wins, because obviously selling them at a loss is not something that you want to do. And we're not at a loss. I mean, I'll note, American Eagle, like, the investment on that has been phenomenal. QC Copper, the same. I mean, incredible. Mistango as well. I mean, don't forget, we invested in Mistango, at 1, 2, and 3 cents. Even though Mistango is not exactly high flying these days, we're still above water. And Awalé, we're basically break even, but we're I think 30, 45, 60 days into that investment. It's going to take time. There's no question about that. So when the time is right, we will take those wins and recycle it. And look for new opportunities, whether that is spinoffs. I mean, I like spinoffs, new opportunities. So it's not just about, the deal with Awalé. There's all sorts of, call it, the sweet spot is secondary and tertiary assets, and companies that have a flagship that are looking to move forward their flagship and are willing to forego, or let's call it, create value in a secondary or tertiary asset that they're not focused on. They can't focus on it. And so we can approach them, buy it for a good value, and say, hey, look, we'll invest it, we'll develop it, we'll put a team behind it, we'll move it forward and develop it. I mean, that's been the model with all of the companies that are in a portfolio. And there's a huge opportunity to create value there, where ostensibly there's zero value in those particular assets. Just like, the Opimiska was hanging around for 30 years, owned by a private family. They tinkered around on it, but didn't do anything. So you had this jewel that was sitting there under everybody's nose, including Glencore, who walked away from it, who are, some of the smartest guys around. But it required, it's not like, it was a mistake. It was just nobody was taking the time and investment to unlock the potential. And it took somebody like Charles to see something that nobody else saw. But beyond Charles's thesis, you have to prove it. And that required a lot of money. I think, I mean, I'm not sure how much money we've spent on it exactly, but, let's call it maybe $15 million we've spent drilling that out over since we acquired it in 2019, and which has resulted in 2 billion pounds of copper pit constrained. There's a lot more copper there. We just haven't defined it yet. That's obviously part of the strategy QC Copper is doing. So there is a time when Orecap will divest its position in QC Copper. Maybe that's when QC Copper gets sold as a whole, or maybe it's not. But make no mistake about it, Orecap is not in the business of holding shares in perpetuity.
Can you help me understand your thinking behind going into Awale again, and also sort of where you expect him to be? Because between now and last time we spoke, they did have a news release, which I'm also going to be talking to their CEO about soon, hopefully. So what is your thinking behind it? And based on what you've seen in the last, as you said, was it 45 days or something that you've closed this investment after? Are you like, is it on track? Are you happy with what you're seeing? Just talk to me about it.
Well, I think there's been some interesting results out. I mean, I think there's been 2 news releases since we've had it out, and both have fallen relatively flat, which is not exactly a surprise. However, I will note that, Awale needs to be more proactive in its marketing, which is something that we've been working hard behind the scenes to line up. I mean, it just doesn't happen like that. You have to line your ducks up, and you have to be ready. You have to get your messaging tight, which, we were looking at some of the presentation and material this past week. It's ready. And so I think what the company has not done yet, and I wish it was done 30 days ago, but what it has not done yet is tell the world who it is. And specifically the CEO, Andrew Chubb, who's a really bright guy, but he's not necessarily known. And so he needs to get out there, introduce himself and his vision for the project, why it's so interesting to us, why it's so interesting to Newmont. The world's largest gold miner. They do not invest in small projects with small potential. This isn't a million ounces that we see here. This has the potential for 5 and 10 million ounces. This is a potential monster. Now you gotta drill that out, and we're a long way away from doing that, but we see a lot of the smoke. What the company needs to start doing is communicate that, because you may have the nicest project around, but if nobody knows, then nobody cares. So that is something that is a key part of our strategy going in. And talk about our active approach. We didn't just give Awale $1 million, because Orecap invested $1 million, and then me and Charles put in nearly $500,000 ourselves into the company, and some other people as well made up that half $500,000 bucks, but the majority of that was Charles and I. And it wasn't just let's fire the CEO. Ultimately, that's what did happen, and put in Andrew, and we needed to market this company, and we needed to introduce them to our capital markets contacts, which we've been doing. So we need to enhance their relationships, bring in new shareholders. We've brought in a couple key shareholders there as part of that financing, but also people buying on the market since then. And then we're looking at all sorts of interesting, things. I really like Côte d'Ivoire. I really like the Odiene project. But yeah, look, it checks all the boxes in terms of an IOCG. I think what's interesting also is the fact that, we're leveraging Newmont's money. Newmont is spending $3 million US on this project as a part of their joint venture, over and above the fact that they own about 6 or 7% of the company. They're the second largest shareholder behind the Orecap or group money. But they're spending that money, which I think is important to note. The Odiene project's quite large. Newmont has the joint venture on half, approximately, and so they're spending the $3 million to help us, as we are operators, help us prove that this is IOCG. And the second news, the most recent news release, or the one prior to that, was about hitting another nice width of VG, which came like under a hole. A number of months ago, they drilled a hole, they hit VG, and then this recent hole drilled under it. So we just showed some continuity. There's lots of visible gold. There's multiple zones in this project. It's really, for me to give it justice, I won't even attempt. I think you should have Andrew Chubb on it in here and going into detail. And he does a very good job of explaining why this is so interesting. And at the end of the day, I think shareholders should take comfort that Newmont is, a joint venture partner and a shareholder. Again, I emphasize Newmont's so big that they don't have time for small projects because small projects don't move the needle. So it's a very interesting project, and a very interesting, when I say project, both OD&A, but also project for us in terms from Orecap's perspective as an investment. I think that even if this company in a normal market, I think this company is worth 5 to 10 5 to 10x of the value that we invested in it, even if it, is not a home run. Okay. But if this is a home run, then I don't want to quote absurd numbers, but we'll make a lot of money because what we came in at a $3.5 million valuation pre-money. So at the bottom of the market, and the company was challenged. Let's just say that it had certain challenges that we solved. So that is a great example of an investment that we like. Those are hard to find, particularly because what I will note is that we had a board. It's so key that you have a board that is sees it the way the incoming investor does. Because if you don't, the board can make your life difficult and fight you to get in. But our vision, our plan was brought to the board, and they said, "Yep, we like it."
I like Awale as well, and fair disclaimer, not confession, I am a shareholder and I work as a consultant for them as well. Partly, obviously, because of you. What I like about it is mostly geologically, even though I'm not a geologist, I've been trying to understand the geology better. And Côte d'Ivoire specifically has a very interesting, it is in a very interesting position because it has 33% of the Birmanian, or however you pronounce it, greenstone belts in West Africa, but it only has it actually has less than 10% of the gold deposits in West Africa. And there are a lot of gold deposits in West Africa. I believe there's more than 300 million ounces in West Africa. So these numbers already suggest a lot of these things. There's neighbors to Awale, close to the Adiana borders that have made discoveries and so on and so forth. So I like the geological setting very, very well. What I'm wondering specifically about you do is how do you approach this as an investment? Specifically, do you have a preferred holding period? Like, is this a 1 to 3 year thing? Is it a 3 to 5 year thing, or how do you look at it?
It's really hard to forecast beyond a year. It's certainly a year investment. I can't see us doing what we want to do in less than 12 months. I mean, maybe we get surprised. We always allow for that, and if we get surprised and we do really well, expect us to take some off the table. I think part of the return of, as I referenced before, I think a broader theme going forward is not just about growth, but it's the return of capital. Not return on capital, return of capital. So that's going to be part of our mantras. We always want to get our money back, right? I mean, I think it's Warren Buffett's, rules: don't lose money, and rule number 2 is, don't forget about rule number 1. So, that is something that we will pay close attention to and allow some of our upside to ride. Don't forget, we've got 3-year warrants. We've got a big position where I think there's a lot of upside. So I take my money off in the near term and let some of our wins ride a little bit longer to test out the investment thesis. So we can have, I like nothing but upside, right? So if you can eliminate your downside, get your money back, and have nothing but upside, it's a great position to be in.
So the point is, like, the idea here is for me to push back, but when you say I like nothing but upside, there's nothing to push back on. So,
well, it sounds so easy, doesn't it? Right? But no, I mean, look, that's, but it's obviously there's risk. Make no mistake. Just like your opening monologue, to your small everyday investor, don't invest anything in Orecap or Awale or any other junior mining company that you cannot afford to lose. This is a risky business. Don't, and just like me, I don't get involved for 10% returns. You're seeking 10 times your capital, and hence the risks associated with that are high.
I agree. I see that some of your other investments are also doing well, so they're getting recognition from the market. American Eagle, as you mentioned, of which you own 5%, has been out and about with good results on the NAG property, of which you also own a big chunk.
Yeah, well, if I were to confirm that, if I were to, let's assume that American Eagle is going to exercise that option, because I expect it will. And full disclosure, I'm chairman of the company, and that's what's the best interest of American Eagle, to own that 100%. So expect it to do that. The question is when. But if we were to pro forma that and convert that right now, Orecap would own 10% of American Eagle.
Yeah, that's what it comes down to. How likely do you think it's for them to keep on hitting these grades over, because they're incredibly long intercepts, like it's 700, 800, 900 meters. That's sort of the eye-catching thing. And now the question is, what do we see next from, what is it, they're on hole 10 right now? I think they're drilling hole 10 as we speak.
I think they are on hole 10, and for holes 8, 9, and 10, we have 0 grades. Just to sort of be clear about that, we've published some core pictures, and which look interesting, like very interesting, but we have no idea what the grades are at this point in time. We see lots of calco, we see calcite, and chalcopyrite and bornite. And so there's all sorts of copper. You can't see the gold by and large. I mean, there's a couple. I mean, there may be some instances of VG, but basically, you certainly cannot see low grade gold. We have call it estimates, because we understand the lithology and what tends to carry and what types of rocks based off the 7 holes that we drilled last time. But it is early days, but it's awfully, it's a huge system. There's no question about that. So in terms of tonnage, it's broad and deep, but not just deep, it's at surface. And so that's what I think sets American Eagle, or I should say NAC, apart right now from a handful of other copper gold porphyries in British Columbia, is the fact that there's mineralization. That south zone starts right there, and we're getting high grade right at the south zone. So if you can make something work in the first 150, well, I should say, I think the second hole we drilled was nearly 300 meters of 0.6% copper equivalent, which is copper and gold. So, if you can get call it an open pit there, and then you've got clearly something going on at depth, which speaks to much bigger system, that sets it apart from the other copper gold porphyries there that live in the 0.3, copper gold equivalent, which isn't all that sexy in the context of today's market, especially when you see, 1%ers by other, our larger peers, which is awfully sexy. But you have to also bake in the fact that, the jurisdictions that some of those projects are in, the infrastructure challenges. If you're at 12,000 feet, that's challenging. The water issues, those are challenging. So all that does is really just take the margin down, right? So I think we have a relatively low margin potential project there, if it is what we all hope it is. But obviously, on top of that, we're looking for higher grade. If we can, and we think, either it's a telegraph system, or there's some sort of overprint over and above, a single porphyry event, whether it's telescope, the epithermal systems on top of it, whether we find a skarn, but even just the low grade aspects. The near surface. When I say the low grade, I meant the higher grade areas near surface. That's really interesting, and we wanted to explore that. In fact, our first hole 8, first hole of 2023, was meant to just test 300 meters of that south zone, see certainly the western extent of that, which is all virgin ground. We drilled into virgin ground, and which is open in all directions. It was totally unknown, and we hit, and then we kept on hitting, and we hit all the way to 881 meters, and then we took a total Hail Mary on Hail 9, and I would say, we hit. There's no question we hit on that. It's not a duster. It wasn't. I wouldn't say, it knocked our socks off either. But what it did say is that system extends. I don't know what it is, 700-800 meters to the east, where there's nothing else there. And then again, we hit it. Where we really hit it is on surface. So there's definitely a lot of smoke there. We have to string the fire together. We are 10 holes into it. There's a lot of anticipation. But you look at onto the valuation potential, what it could be relative to what it is, with $25 million company, what it could be. And we got Teck, interested, which I think again sets us apart. Not everybody has a company like Teck backing you, especially at such an early stage. They saw something unique. We think the bornite makes us unique. You don't see, there's two other mines, the Bell and the Grand Isle, that operated, I think, under Noranda back in the 70s. They operated at 0.3. Okay. So there's precedent of real economic mines that operated at those grades, just what NAC has today. They operated at those grades, but 40 years ago. So, you can make money doing these things because we're low elevation. We're 1,000 feet. 1,000 meters, no rocky mountains. You can drive to it. There's water sources. The terrain is easy. It's really, as far as British Columbia goes, it's quite favorable terrain, but we got to drill this thing out.
Okay. So we talked Awale, we talked American Eagle, you talked QC. I guess what's left is Mistango, but also your own drilling, because that's close to each other. So we can obviously talk about that. Your own drilling, what sort of the state are you waiting for any results, or what are we going to see soon?
No, we're not drilling right now on any of our Kirkland Lake portfolio within Orecap or Mistango. What's going on right now? What's going on right now is we're in year 3 of this agreement. I think what's happening right now, if I can sort of, I don't want to say off the record, but like what's going on is Agnico, after absorbing, or I should say merging with Kirkland Lake, they are figuring out their long-term plans. So that's what they are doing. Obviously, a merger of that source has a lot of things to figure out. And what they have they basically dominate the Kirkland Lake camp now. And the things that they don't own, well, they don't own us. They've got an option agreement to own up to 5 of our properties collective between Mistango and Orecap. And then there's a couple other deposits that they don't own, but they're shareholders in. What they do have outside of the Macassa, which is on the west side of that camp, the far west side in Kirkland Lake proper, which is one of the highest grade gold mines in the world, where Mistango owns its Kirkland West project, which has the whole western extension of that. There's also the east side of the camp, which is different, and it's lower grade. And they've got, Agnico owns their Upper Canada and their Upper Beaver deposits, which are large, well-developed, multi-million ounce deposits. Now, Macassa's got 21 grams over here, 35 kilometers on the east, and then over here you got the lower grade, like 3-4 grams, but multi-million ton. Question is, are they going to build a processing facility in Kirkland Lake to deal with all of that ore on the east side of the camp? That is something that they are internally sorting out. And I think it's inevitable, frankly. What do I know? But I mean, if I were them, I think they've got so much gold there. There's so much gold in that camp. And it's not just Mistango's Omega. It's not just Orefinders McGarry. There's the Curatis in there, which is a large bulk tonnage pit, which our assets are all intertwined with. And then, of course, the Upper Canada. There's 10 million ounces there. You string it all together, that's a 10 million ounce camp. Are you going to build a processing facility there? It's inevitable. And so that's when I think when they make that decision, that will spark an interest in the camp. Right now, there's just not much interest anywhere. And even if we were drilling, we'd put out great results and nobody would care. That's just the environment of the market. Hence, the strategy of Orecap is to take advantage of that. But that camp in Kirkland Lake, we spent a better part of a decade accumulating. It is not easy to get good ground right on the Cadillac break of in the Kirkland Lake camp. So that's what both Orecap and Mistango have successfully done. That's why collectively they attracted $120 million deal to buy 75% of those projects. That's pretty good. But zero value is reflected in either of those prices. Equities right now is like literally zero. Which is, an inefficiency, one that will, to me, that represents value that's not reflected in the price, and that's, the inefficiencies that we talk about in an inefficient market. Beyond that, Mistango is going to be drilling very shortly on its Goldie project, which we've done a pretty good job there of putting ourselves right in the middle of an emerging camp. It's in the Shabandowan, which is in the Thunder Bay camp. The Shabandowan is a greenstone belt that is huge. It's extremely well endowed in gold. It's a low-grade system. Okay, so this is a 1-grammer environment. You can see on the far west end, you've got deposits like Gold Shore, which has been in the news lately. And I think that was unfortunate, but it doesn't mean the gold's not there. It just means the interpretation is different. But trust me, geologists have varying opinions on virtually every deposit. but we're further more to the east, where a company called Delta has been having great success. They've been getting some pretty flashy numbers. You do see high grade zones within it, but this is a low grade system, and this is the type of system that requires consolidation, just like I've done in Kirkland Lake. So I'm continue to be a believer in consolidating land packages, assessing them from 30,000 feet, raising substantial capital to drill out your thesis, because these low grade systems require A, consolidation, and B, money to drill them out. So again, Mistango is going to be spending about $1.2 million on this drill program. It's still an early stage program. We're trying to prove that what Delta has been drilling and getting a lot of success. They just raised $10 million, so they've been the flavor of the year, sort of in the Ontario gold exploration play. We're right beside them. Literally, we're drilling the same structure. We got to prove that gold, the structure that runs onto our property, also carries gold. So that's what we're going to do, and then expect us to expand our position in the camp. And ultimately, like in a perfect world, obviously this is not on the table, but like Goldie and Delta, are one project. If it's going to be a mine, they're one project. So, that's my general view, and that's how we'll move Mistango forward.
Why I brought this up and wanted to ask you about each and every one of those is because there's stuff moving within those companies, and as you said, American Eagle, for example, the share price has also not been doing bad at all, but none of that value gets reflected over to you. So, I mean, sure, it's obviously partly the market, but is it only specifically the market? Is it, what's happening there?
No, well, I do think that call it companies that hold equity positions aren't necessarily always fairly valued. So, unless there is a big home run, like if QC Copper is what we expect it to be, and in 1 to 3 years, it's a big win and a big exit, and Orefinders or Orecap is sitting on that big position, you expect it to get a lot of attention. But you're right. I mean, look, American Eagle's doubled. Meanwhile, Orecap owns 20% of the asset and no love. I mean, that's. I don't have the direct answer to why that is, but that's oftentimes why it is. There's certainly, I think, some people who are playing American Eagle through Orecap as a sort of a levered and cheap way to enter without chasing a company that's hot. So it's sort of a less levered, patient, cheaper approach. And I think that's, there's definitely some smart money who have come into Orecap slowly but surely, or at least they're still holding it because they do believe in the model and they do believe in us. I think you're betting on our team. You're betting on me. You're betting on Jerry. You're betting on Charles and Gotham and Joel. We've got a really good team. We're highly incented and self-invested, and we do good deals, and we focus on good projects, and we only work with good people and good technical people, but people who do good business well. So you're betting on the jockey, here, and the fact that we're going to continue to put out good deals, and that in time our shareholders are going to be rewarded. I mean, that's the bet.
I think I've been through most of my questions here, and I hope we can keep these updates coming. They're broad updates. They're well in depth. You do them often on your own, but I like sort of hearing the story sort of from the horse's mouth. So I think I've been through most of my questions. Anything else that you came here hoping to talk about, but I'm failing to bring up?
No, I think we've gone into depth, and just we'll note that any of your audience, they want to contact me. My contacts are on all press releases for certainly for Orecap and other companies, so I'm easy to get a hold of. Happy to talk to people who have questions about any of our companies, specifically Orecap or anything within the Ore Group. I'm knowledgeable about, and if I don't have the answer, I can find somebody who does.